Las Vegas. Thank you for joining us again on Realty Check Las Vegas, your local real estate news show on what's happening here in real time in Las Vegas in the real estate market. Today we have a great show for you. So if you're watching our show, listening online, like, follow, share, tell your friends about it. If you follow us on social media, you'll be notified every week when we go live. Other than that, if you download our show, you'll be notified every week when a new show posts. So thank you for tuning in. Thank you for following us. And we have a guest on our show today that is Chris is amazing at market statistics. So we're bringing you a great market update. I'm very excited to have Chris here on the show. Chris Dowlen, Keller Williams Realty, the marketplace. Chris, tell us a little bit about yourself.
Thanks for that introduction. Got into real estate in January of 2007 when everything was crashing. Couldn't have picked a worse time, but it turned out to be okay because I just had to learn how to do short sales, how to help people through those foreclosures and all that kind of stuff, and then been in the business ever since then. After about 2 or 3 years, noticed that I started tracking the numbers of what was taking place in the market just because I find it comforting to understand what's really going on, not what I'm being told what's going on. So I enjoyed that and have kept it up ever since. So kind of have those numbers for you, and let's see, what's useful for you today.
Yes, and I'm so excited to talk about that today because it is. You can always just listen to the fear, listen to whatever's being reported, right, and go crazy and be terrified about market crashes or whatever's happening. But the numbers tell the truth. You can't. They really don't lie. So that's definitely where you can keep your stability in all of this. And you started in short sales. When I started in real estate back in 2014, short sales were still a thing. So my first sales were short sales, and learning how to do those first and then going into like a regular sell was like super. I was like, oh, I could do this forever. This is easy.
Yeah, it had a lot of upside when the market changed. You're like, wait a minute, what? I just met this client. I'm going to help him out, and we're going to get this done. It used to be like a year-long connection of talking to all the financial institutions. So yeah, it was a big shift.
Yeah, like you can sell a house and it's not going to take a year. Mm-hmm. Like that's amazing. So starting off with, I always report the numbers on what we have for single-family inventory in Las Vegas. I haven't been tracking condos and townhouses included with those numbers. So our total inventory in Las Vegas is a lot higher than this, but I track it as single family inventory only. It's like single family homes.
And I do the same thing, because I think it skews the numbers because condos can't allow certain, like you can't get FHA and VA loans on almost all of them. So you're not quite sure if you're getting a real understanding of what buyers are looking at. Exactly.
And you can definitely see condos on the market for, longer days on the market. And I just like to keep it single family residents, right, to keep it clean. However, we're at 3,300 in single family inventory on the market as of this morning. 628 price reductions over the last 7 days. So I'm watching news reports, right? And on the news, they're saying, the market's dipping, buyers are backing out, it's because the rates are going up. And then I seen something yesterday that the rates are coming back down again. So that we have so much fluctuation, right? That again, the price reductions are an indicator that we are seeing a little bit of a slowdown. So what are your thoughts on that? What are your thoughts on where we're at, what's going, what's happening?
Sure. Well, you put a ton out there, so there's a lot of things to break apart. So first of all, the fact that we're at 3,300 single-family residents today, that's true. You're going to see later in the show that I got a graph of a presentation I did where I pulled the numbers on May 9th, and it was closer to 2,700. So we've literally had over 20% increase in our inventory just in the last 2.5 weeks.
That's amazing.
So that means, yes, homes are not selling as quickly as they were. We used to have about a 3-week inventory, and now we're at about a month and a half. So yes, homes, there are going to be not only greater options for buyers to be able to look at properties, but it does seem like the prices are going to stop going up, not only as dramatically as they are, they might even just level off completely at this point. And so we'll see what takes place with interest rates. You want me to speak to that real quick as
Yes,
well?
of course.
Because I was really curious about how we were at under 3% interest rates in January. We had a one-time Fed increase of 50 points, so 0.5%, right? And yet interest rates jumped up over 2%, okay? And so we went from a little bit under 3 to a little bit over 5, right? And I was talking to lenders of why that's happening, and then they throw all their acronyms and reasons around and terms that I'm not familiar with. But long and short of it, it's like, yeah, we're going to get one more increase in the Fed interest rate, but it's probably going to come back down for what the home buyer is because we jumped too far ahead and lost too many clients.
Right.
So the banks are probably going to make a little bit less money, which is a shocking thing to hear, given what we're hearing in the news about inflation. But I would expect interest rates to come down just below 5% based on the few different lenders that I've spoke to that seem to have that consensus.
Right. And an interesting thing about the rates that I heard is that, the Fed was actually trying to slow the market down, but I don't think they were trying to halt it completely.
Yeah, it's one of these odd things where the federal government, and I don't even know if the Fed is technically under the federal government like the IRS is, again, another area where I'm not an expert, but it's like, oh, we've got way too much inflation and we need to slow it down. And so they did, and now we're not happy about that. Even though in February, we're like, this isn't sustainable. We can't continue to go 20% plus appreciation year over year and expect anyone to be able to buy these homes.
Right.
So there's a lot of conflicting economic pressures going on.
Absolutely. And that's one thing I've been telling people too when I talk to them is again, 20% increases year over year. This isn't a normal market. So for people to say like, oh, is the market going to crash or is whatever, I'm like, we're not in a normal market right now. I feel like it's going to adjust to something that's a little more normal because this is not.
Well, it's going to adjust. I don't know about normal. There's just no such thing as that, right?
Yeah.
I mean, so for whatever that means, because normal, when I first got into business, I thought it meant that a home took 3 to 6 months to sell. And anything less than that was fast and anything more than that was long.
Right.
And I'm like, who does that apply to? Because I've never experienced it here in Las Vegas.
Yeah.
I do think there are, again, conflicting pressures in our economic situation in so much as interest rates went up and buyers, not only were the homes not coming back down, but they've just gotten too expensive and now you have a higher interest rate and I can't afford that mortgage, period, the end. And yet investors were buying homes up more quickly because they knew inflation was going to take place. So think about the stress that puts on our market because big money is buying the homes for cash and yet homeowners, primary residents, they can't purchase the property. That's odd.
That is weird.
I mean, usually you follow the money, but you can't afford to follow the money. So how long will that last? At some point, the big money is going to have to stop buying these homes because inflation is coming down. And then when is that going to allow an opportunity for the primary residence purchaser to be able to get back in the game?
Absolutely. And the fact that some people are pulling their money out of the stock market to put into real estate because it's safer at this point.
Again, it's one of those things where I don't know that a person should be doing that unless they have a great financial planner. And as a realtor, I'm part of that because I don't want to advise someone to take that money out of the stock market, not knowing what they're, where they have their funds. But, we've seen that go down, and yet, again, smart money, the people, the banks and the hedge funds with all of this extra cash, they have not been putting it into the stock market. They've clearly been putting it into real estate, and not just in Las Vegas, because they want a thing. They want to hold on to something and it feels more secure. So I would agree with you on those terms. Yeah.
A tangible asset. Yeah. Yeah. So let's take a look at the charts. We have some slides here, and these are the slides you said you pulled them from March 9th.
May 9th.
That's what, May 9th, wrong M, May 9th. So this was just a few weeks ago. So let's talk a little bit about this. I know you are just so great at explaining these numbers.
Well, and they're a little confusing as they're presented on there because what I'm not is, great technically. I just love my numbers. So as you look on the left side, you'll see May ER. That means what's available on the market right now. It was 2,700 plus homes that had gone up 500 since April. So I do it, that start of the second week of every single month. Okay, so for a little bit of consistency. So we increased in our inventory, and now we're going to see by June it's going to be even further than the 500. We're even above it now, so I expect that. Then you go down and you see SS, which is short sales, and then REO, which is foreclosures, and then NN, which is non-distressed. I do that because having been raised in real estate during that distressed market time, I still monitor those numbers. Because if short sales and foreclosures start to rise in both volume and percentage, I want to be aware of it. It's not happening right now. Okay?
Right. So when someone calls you for a foreclosure list, there's 6.
Yeah, there's 6. There's nothing. In fact, I even have agents sometimes say, hey, should I get into this? And I'm like, well, there's only 15 homes on the market. Do you really want to compete with the other 20,000 agents for 15 homes? You know, it's just not a viable option right now. And again, if homes are going to appreciate that fast, of course, there's equity to sell. So even if you get behind on payments, you can at least cash out with some money.
Right, absolutely.
But if you look at the general trend, you'll see hardly any distressed. And then on the other side, you'll see April. So in early May, what I do is I look at what the numbers are that happened in the month before. We did 2,800 homes. That was down from March, which is not that unusual. March tends to be a big month for us in Las Vegas. We do a lot of sales out of the gate. Once winter's over with and we've adjusted and done our tax returns, we hit the market pretty hard here.
Absolutely.
So coming down a little bit is not so, much as a surprise. It's year over year is where we're dropping. You know, we have done like 4 months in a row where we're doing less sales than last year. Okay, it's not because we have less demand. It's just we have less inventory and affordability. That's what's really dropped the most.
That was something that came up earlier in the year, this year, in some discussions, is that people. I heard a news report that said sales were down, and it was when our market was still really hot, and they were saying, well, sales numbers dropped, so real estate's dropping, and I was like, no, that's incorrect completely. The sales numbers were dropping because we didn't have inventory to sell.
Sure.
It wasn't because we had a lack of buyers. Where now we're seeing more inventory, so that there's a little bit of a shift in that.
Right. But affordability is still the issue. Okay.
Yeah.
So last summer, I just picked a month. I picked August, and I looked at the numbers, and we did a little bit over 3,095 sales. That's how many there were. And of all of those, the amount that were under 300,000 was 343. So it's about 11%. About 11% of our market was under $300,000.
Wow.
Okay, for a home, which is reasonable. You know, I mean, you're getting into that property, you're still going to pay just about $2,000, if not a little bit over, for that mortgage. Well, you look at the inventory now, and of that 3,300 that you mentioned, there's all of 35 homes under 300,000.
Really?
It's 1%. It dropped from 11% to 1%. So affordability has gone way down.
And I am seeing this as well. I've had a couple buyers recently that are like under 420,000, which is still FHA range, right? Still hugely competitive in that market. Still having multiple offers. Still having a lot of competition. Whereas you get over 500,000, you see it's starting to slow down. The houses are on the market a few more days. They're not getting multiple offers as often, unless of course, those really attractive homes always have a lot of demand.
You're absolutely right. The aggressiveness in the market is still below that $500,000 mark, and if it's below 400, it's uber aggressive. Just because that is the home that's the closest to being affordable. The ones over it, which is the vast majority, they are starting to sit a little bit longer, which is not the worst thing to happen in a real estate market. That the seller actually has to put a good product on the market. Like you said, if it's beautiful, the upgrades are done well, if it fits the modern culture desire, have you opened up the space? Do you have warm colors? Those types of, things, which tends to help you, sell the property. But you can't just throw it on the market now at 600,000 and expect to get it just because everything's rising.
Right, and not do anything to it, not clean up or that's we definitely over the last year have seen a lot of homes sell instantly that were not even market ready.
Right.
And we're seeing a little bit more changes in that, of course. And the price reductions that we've seen like over the last 7 days, I'm sure that is exactly where those are coming from. People have just been pricing too high or not being realistic about.
Yeah, And we can look at that and get a false sense of, hey, the market has peaked, because it probably has, in so much as appreciation. It's not going to go up that fast anymore. Let's see what does take place. As we're going to look at the graphs later on, appreciation is still rising, but it's largely because there's just no homes in the lower price range that are coming on the market. So the sales that are taking place are at a higher volume. Does that mean it's actual appreciation? Well, again, it's always local, right? What's happening in your neighborhood, in your subdivision, and within that mile or two that a buyer is looking for homes?
Right. What do you think about this, Chris? I've heard, besides the last, well, when we had a crash, like an actual crash, back in 2009, 2010, in the beginning, a lot of people thought Vegas wasn't going to be affected. Mm-hmm. And that was tremendously wrong. We were second in the nation, I believe.
We were first in growth and first in falling, right? I mean, we were up there top 5 at one point almost every single month for years and years.
Right. So the reason why a lot of people thought that is because historically, as things shifted in the market across the nation, Vegas has always like kind of held stable. Mm-hmm. So do you think that even right now with the changes that are going on, across the country, nationwide, in different markets, that we're going to stay on top or stay stable or hold steady through it?
Well, Las Vegas has morphed, okay? So the reason it didn't change is because it always stayed small. It was just always a small place. People didn't want to come in here. The summers were brutal for them. Whatever reason, they liked their hometown, doesn't matter. The businesses weren't here. But we changed in the 1990s. We started growing extremely quickly, okay? But for a long time, we didn't. It was quite slow, okay? And then it accelerated, and then it went through that 2000s where we were booming everywhere, and then we crashed in so much as value, but we did not crash in population. Okay, right. And so we've pushed on through. Now we're almost at 2.5 million. I think we've long ago reached a critical mass where we're not going to fluctuate so quickly up and down. We're not going to have a big surge of foreclosures and short sales, and we're not going to rise up as much when the nation itself stops. We're going to be a little bit more relevant. You always have to look locally, again, in your own street, subdivision, and all that for when you're looking at the true value of your property. But I feel like because we've gotten large enough that we can't grow too quickly and we can't shrink too quick. There's a lot of businesses here, and it's becoming more stable, albeit a water supply shortage.
Let's not talk about that. No. The water supply. I've been hearing a lot about that too. That's a whole other thing.
Well, it's a fascinating topic that is definitely going to affect real estate at some point, but we don't know when. Yeah. It's not nearly as predictable. Period. The end. It just isn't.
Most definitely. So let's take those charts. Let's get those charts back up. Are we done with the first chart? Are we?
And it's a little confusing as you see those numbers. What I'm trying, because everything is an abbreviation, but I'm just trying to look at the general trends of, are the non-distressed homes owner-occupied, tenant, vacant, and to be frank, I haven't seen a fluctuation in those numbers in over 4 years, which that gives me the belief that we are at a critical mass population, that it isn't going to jump all over the place. But you did have another graph up that showed appreciation. So, yeah, I know, right? It goes back to 2019. So you can see that is what our last normal year was, right?
So this purple line across the bottom is 2019. Mm-hmm. Okay.
And then 2020, that's a pandemic year.
Yeah.
That's a pandemic year that's started, find April. Find May when it started, right?
Yeah.
But you can see we still kept appreciating. And then last year, wow, the widening gulf between, what we had been selling and what we were. And then it's gotten even worse, right? It's expanded. So it's easy to say, gosh, that's not sustainable, but it's harder to find out the actual factors that are going to make it fall.
Right. Absolutely. I see that. And that's just, it's a huge gap between just last year, even in this year, where the gap between where we are is.
Well, I look at that median price and I tie in the information I talked about affordability of last year in August. We had 11% homes that did sell be under 300,000, and now you look at the market right now and it's 1%. So are we ever going to go back to a plethora of homes, 11% that are under 300,000? I don't believe so. Do you?
That's a hard question to answer. No, I don't think that we're going to get below that number, but I do wonder how industry workers, people that work, like our Vegas economy here. How are these buyers going to afford homes?
Well, I mean, weren't they asked that question in Seattle and San Francisco and LA
Yeah.
in the 70s and 80s and 90s? And here's what happened.
They made it work.
They figured it out. They're Americans. We figured it out. Do we want to be here? Is it worth it? Is this the lifestyle we want? Is this a location? Is this where we want to raise our kids? Is it, if there's enough benefit to it, they figure it out. And that's what happens. And I expect that to happen here. I would expect the appreciation to stop going up at 20%. I would expect that to level off. But I mean, I'm only using the history as an example. Okay, I can't actually foretell the future.
Of course.
But the truth is, when milk went up in price in the 70s and 80s, it didn't go back down. It didn't.
Yeah.
It's a capitalist society. If you can get that much money, you're going to get that much money.
Yeah, absolutely.
And if you can afford it, you're going to pay it.
Yeah, and normal appreciation. Well, again, normal. Nothing's normal, right? But just historically, appreciation's about 5 to 7% a year. Is that correct?
I thought it was a little bit lower. I thought it was 3 to 6, but those numbers are close enough.
Yeah. So somewhere around there. So again, 20% is crazy.
Right. It just means no one can be here. We're going to have a place filled with investor homes. However, those investors are renting, and there's not like there's a strong rental market in so much as easy to get into. Those prices to rent are just as expensive as a mortgage.
Oh yeah, in some cases more. And it's so people have seen over the last year or two how risky, I guess, renting can be, because for so many years, people have been in these leases, long leases. Their landlords never raised their rent. Over the last couple of years, we've started to see these big increases. I've been hearing people say that their rents went up $400 or $500 a month. We've been seeing big increases at the time when their leases come due. So the security of being in a rental, which has never been secure, let's be honest, but it's now that landlords are starting to raise the rents, people that are in rentals are feeling a lot more. They need the security of home ownership.
Sure. And let me dovetail with that thought of, okay, so if it's still difficult to get a rental, not only because there isn't much to find out there, but it's extremely expensive and it's hard to be paying $2,000 plus when you're like, I'd rather just own it, right?
Right.
Okay, so that's one pressure, okay? And interest rates might come down a little bit because they accelerated too quickly, okay? And inflation might slow down a little bit because the feds are going to raise that base interest rates again, right? We're expecting that at 0.5 point. So if inflation slows down, then investors won't be buying as much. Right. And we have more inventory. So personally, I find that rather optimistic, because if you are a buyer, it would seem in the next coming months, mainly when it's deathly hot outside and you got to drive around in that 105-degree heat, you're going to have more options of homes to look at. You're going to be able to compare what is my mortgage on this home and what is my rent over here, okay? And like it or not, 66% of Americans love to own a home. So you're never going to get rid of that. And you see Las Vegas, we are filled with condos that have people in them that they would love to be able to buy a property. And I could talk about FHA buyers for a minute just to validate that point.
Sure.
But I feel like the fact that rent is so high, inflation's going to come down, which is going to soften the demand for the investors, and there's going to be more options available. So even if it's expensive, the fact that you get to barter with different sellers and maybe get a lower price, that's going to cause people to be enthusiastic about going out and getting back in the market.
Absolutely. And I'm even seeing that now in some cases too, where we're seeing better options. I mean, you can actually negotiate a sell for a buyer if they don't have any other offers on the property. And that's something we haven't really been able to see over the last year. And negotiation is getting the acceptance.
Right. And again, to dovetail, the negotiation, normally, I've been through 3 of these markets now, right? And normally the first thing that starts getting negotiation, it's not the price coming down, it's the closing costs. The buyer gets to say, I'll give you darn near close to your list price, but you got to give me my 3% closing costs so I can get into the home without having to pay these other fees. And so now it's workable for them.
Absolutely. Let's take a look at the other chart that you have here. Whoa.
Yeah, right? So you saw the median where there's this wide gap in what was taking place, that appreciation kept going so fast. And yet here we see where it's slowing down. It is.
Yeah.
Go ahead.
The black line is where we're at now.
The black line
Okay.
is this year. Something I want you to pay attention to is look at the green line. That's last year, right? So in December, we actually did less sales in 2021 than we did in 2020. Okay, it was just a little bit, but it was the indication that something's going on.
Yeah.
And then you can see we're doing just a little bit less sales. And now in April, it was significantly less sales that we had in last year. I expect that to happen again. One thing I have started monitoring since the pandemic started, so only since March of 2020, was how many homes are under contract and how many homes total under contract and how many homes have been under contract in the last 30 days. And we are at the lowest point in those last 2 years at this point. We're only at 2,600. We got up to 4,600 homes under contract and we're
Wow.
at 2,600 now. So I would expect there to be less sales even as we finish up May. So that number is going to go down again, okay? Which isn't the worst thing in the world. That's
No.
what we expect.
Yeah.
But if buyers have more options out there, if they can find the right home that maybe doesn't demand the highest price because it isn't in the best condition, but it's the right location and floor plan, and they can get some closing costs, they might start seeing that happening again.
Yeah, yeah, and that's great news for buyers. It really is.
It's also encouraging news for sellers. It's unrealistic to think I'm always going to get 20% more, and no, I'm going to wait till 6 months later. What serves you best, right, is what we should be doing, and should be thinking about it. And at this point, you are going to have to be a little bit more come to the table and work squarely with the buyer.
Yeah, yeah, and it's good. I prefer to operate real estate under those terms.
Right, where it's fair on both sides.
Right, absolutely. It's a win-win for everybody. Chris, we do have I have listener questions, and again, if anybody is listening or watching the show and you have questions that you would like real estate professionals to answer here on the show for you, email us at realtycheck. Realtycheck.vegas is our website. You can leave us a message and send us an email, or trishwilliamsteam@gmail.com. We'll take email questions from there as well. And we had a question that says, and this came from Jacob and Kiera. The question was, what does it mean when a home's on the market for 3 months with no offers, and you're an out-of-state buyer? Should this be something that you should be wary of?
You want me to answer?
Yes, I do.
What you should do is you should call your agent.
Yeah.
Because you need to know why. Is the home overpriced? Do they really want to sell? Do they not allow accessibility? There's 4 reasons why a home sells, and there's the same 4 reasons why it doesn't. And it's price, condition, accessibility. Can you get into the property, and the marketing? Sometimes it's just the marketing. Sometimes there's only 4 photos and it's a horrible view and they haven't done a good job of actually demonstrating the quality of the product. But often it's accessibility. You can only get in 3 hours on Tuesday and 4 on Friday afternoon, and that's it.
Or it's in no-show status completely.
Something of that nature, because a tenant is in there that won't allow you, things of that nature. So there's always a reason. Find out what it is and if it serves you. Like, that home is great, and if you know the right price that works for you, see if you can't work with the seller, because if you wait until it comes down, well, then other people are going to be paying attention to it as well.
Absolutely. There's probably more opportunity in that point of it. And a funny thing is, last year when we had this chaotic market, there was a home that was like over 30 days on the market, which last year, that was crazy.
A sin?
Yeah, this home must be horrible. It had a lot of animals. Dead animals on the walls.
Oh God! Well, that's different.
It was very different. There was wow.
Yeah, creepy doesn't sell.
Yeah, it was owned. We found out more, owned by a taxidermist. I mean, it was to a point where I've never seen before. However, we were able to get a wonderful deal, and it was a great house. It was fairly new. It was a great home. Home inspection was beautiful. It was sometimes something as little as that, and you look at the listing photos and you're like, wow, is this a joke?
Right.
But something as simple as that, and just taking the opportunity to look further into it.
Right, that's exactly right. The Warren Buffett mantra. What's he got? When people are greedy, be fearful, but when people are fearful, be greedy. So if someone's not paying attention to that, find out why, because the reason why might not bother you at all. If the person can't take out their personal stuff, and there's lots of things that people put into the home that just is inappropriate for buyers to look at, but it could help, with you get a great deal.
Right,
'Cause you can
absolutely. You're
overlook
not
it.
buying that stuff. It's going to be
Exactly.
gone when you close.
Which we know logically, but emotionally sometimes it still trips people up. So if it doesn't trip you, maybe you get to
Yeah,
get a win.
get to benefit from that. Yeah, so that was, I mean, that was just a killer deal in a really hard market to
Right.
not find killer deals in. So
Right.
that was great. And sometimes I think that, you know, talking to your realtor, just as you said, but looking at the history, you know, we have that little time clock button
Sure.
where you can look at the history on
Sure.
the listing, and you know, if it's been off and on the market 5 or 6 times during the 10-day due diligence period, that's, you know, certainly a red flag.
Right. But to get back to the question, if you're an out-of-state buyer and it's been on the market for a while, that should raise your curiosity, not have you run away from it. You might find out a legitimate reason of, you know, it's got a sinkhole in the backyard. Yep, I don't want it either. But until you know that, you know, you're not. You should be curious.
Ask more questions if you're
Yeah.
interested. If it looks like something that's potential, I definitely think you should have your realtor look into it. Virtual tours. You know, if you really trust the realtor that you're working with, you can send them out to, you know, look at the house or tell you some more information. Maybe it's a bad location. Maybe there's a crazy neighbor next door. You never know what's going on.
You don't know, but clearly with the pandemic, you know, I've done more FaceTime sales for buyers who've never looked at a property, and they're thrilled with what they got.
I know that sounded insane a few years ago, but now it's like,
Yep.
yeah, that's normal.
Yep.
So it happens all the time. Chris, you're so informational, and thank you so much for being here on the show today. How do people contact you if they have more questions or they want to talk to you?
Shoot me an email, text, whatever is convenient for you. You can see my contact information there. Love to be of service. It's an honor. I really appreciate you having me on.
I appreciate you being here. I appreciate this. You do our team meetings every month in our office and go over these charts and just such a great job at it. So I really appreciate this. Thank you. And you guys know how to reach me. And if you're watching the show, again, take a moment, like, comment, share, download, tell your friends about us. Click the follow button on Facebook so you can be notified when we go live. And we will see you next week on Realty Check.